Welcome to Lesson 2 in Accountancy. Today, we will learn Accounts of Not-for-Profit Organization. Let us understand what is not-for-profit organization. Some organizations are established for the purpose of rendering services to the public without any profit motive. These organizations are called not-for-profit organization. Examples: charitable institutions, educational institutions, cultural societies, sports clubs. Features of not-for-profit organization. 1. These organizations function without any profit motive. 2. Their main aim is to provide services. 3. They do not undertake business or trading activities. 4. Their main source of income are subscription from members, donations, grant and aids and legacies. Final accounts of not-for-profit organization. Not-for-profit organization prepare following accounts. 1. Receipts and payments account. 2. Income and expenditure account. And 3. Balance sheet. Receipts and payments account. It is a summary of cash and bank transaction of not-for-profit organization. Features of receipt and payments account are as follows. 1. It is a real account in nature. 2. This account begins with the opening balances of cash and bank. 3. And ends with closing balances of cash and bank. 4. All cash receipts are shown on the debit side. 5. All cash payments are shown on the credit side. 6. All cash receipts and payments of capital or revenue nature is recorded. 7. They may relate to current year, previous years or subsequent years. 8. Non-cash items such as depreciation, outstanding expenses, and accrued income are not shown in receipts and payments account. There are certain items related to not-for-profit organization. They are as follows. Subscription amount collected periodically from the members monthly, quarterly, half-yearly or yearly. It is revenue receipt. Legacy. It is a gift made to a not-for-profit organization by a will. It is a capital receipt. Life membership fee. It is the amount received from the members for being member in the organization. It is capital receipt. Grants. Grants received towards construction of buildings, acquisition of assets are capital receipts, and the grants received towards maintenance of assets, payment of salaries, etc. are revenue receipts. Donations. General donation is an amount received without any specific condition. It is a revenue receipt. Specific donation is an amount received with a specific condition. It is a capital receipt. Honorarium. It is a voluntary payment that is given to a person for services for which fees are not legally or traditionally required. Let's look at the format of receipts and payment account. Opening balances of cash and bank are recorded on the debit side of the receipts and payments account. All cash receipts are recorded on the debit side and all cash payments are recorded on the credit side. While recording cash receipts and payments, no distinction is made between revenue or capital items. The balancing figure is the closing cash and bank balance. Now we move on to income and expenditure account. Income and expenditure account is a summary of income and expenditure of not-for-profit organization prepared at the end of an accounting year. Features of income and expenditure account. 1. It is prepared to find out the surplus or deficit. 2. It is a nominal account in nature. 3. It is just like preparing a profit and loss account. 4. Items of revenue receipts and revenue expenditure related to current year alone is recorded. Let's look at the format of income and expenditure account. Opening and closing cash balances are not included. Also, capital receipts and capital expenditures are not recorded in this account. Only revenue receipts are recorded in the credit side of profit and loss account, and revenue expenditure are recorded on the debit side of the account. Non-cash items such as bad debts, depreciation, which are not recorded in receipts and payments account, are recorded here. The balancing figure is either a surplus or a deficit. Finally, we prepare the balance sheet. It discloses the financial position of a business on a particular date. It gives the balances only for the date on which it is prepared. Features of the balance sheet. 1. A balance sheet is a statement and not an account. 2. A balance sheet is a summary of the personal and real accounts, which have balances. 3. Personal and real accounts having debit balances are shown on the right-hand side, known as asset side. 4. Personal and real accounts having credit balances are shown on the left-hand side, known as liability side. 5. The totals of the two sides of the balance sheet must be equal. 6. Balance sheet is prepared on a particular date and not for a fixed period. 7. It shows the financial position of the business according to the going concern concept. The balance sheet is divided into left and right sides like a T account. The assets are listed on the left-hand side, whereas both liabilities and owner's equity are listed on the right-hand side of the balance sheet. If all the elements of the balance sheet are correctly listed, the total of asset side, that is, left side, must be equal to the total of liabilities and owner's equity side, that is, right side. Thank you, and happy learning.